Research Talks podcast on Stopbox with Alan Green. Alan, how are you doing? Obviously saw you very briefly at the Momentous Investors last Thursday, a very brief encounter, but I think that was a pretty good event. There was lots of investors there and company CEOs, weren't there? And everyone seemed, despite the market conditions, in a fairly high spirits and sharing sort of their experiences, their pain and their success. But I got the general impression that it was a pretty vibey event.
It was. It's always a vibey event, momentous events, and having been to previous events, 2019, 2018, and further back than that, Wayne and his team always put a good show together and bring some really good, knowledgeable investors along. And these are the guys that are very supportive of companies across the various social media channels, particularly Twitter, of course. And it's great to put sort of faces to names, and certainly I caught up with a lot of people there. It was good to see again. Wasn't feeling brilliant as I told you beforehand, so that's kind of had a knock-on effect over the weekend. But yeah, it was good to get out, and I think now we're getting back out to and back to a more conventional way of living. I think it just goes to show that you can develop a relationship with a group of investors over Twitter, meet them, and then share those experiences, and it brings you closer together. It's a really positive thing.
Yeah, it's a very good thing to do for any investors, really, if they can, to get to these events, and hopefully they will start up again in earnest after this sort of brief COVID has done that thing to events that made them not very unable to go ahead. So I think slowly we will get back to them fully. As you say, it's invaluable to meet people with similar mindsets and to share the experiences. And difficult to find friends in this game, but there are some.
Yes. Yeah.
There are some around. But anyway, we're going to be talking today, or you're going to be telling us the investment case for Roquefort Therapeutics and Echo Energy.
Indeed. Okay, so starting with Roquefort, Mark. Roquefort Therapeutics are listed both on London market and also on the OTCQB US market, with the London EPIC code is ROQ, US EPIC code is ROQAF. And this is something that a lot of technology companies are doing now. They're going for that dual listing, I say technology, sort of technology and biotechnology, because, of course, you're exposed to a much larger group of investors, and the US market certainly is a very powerful market and a very, very powerful ally. So the company is currently trading at 7.5p, or that was the close on Friday, giving the market capitalization of 9.7 million, been traded as high as 12.4p on the year, and it's actually just off year lows at 7.25p. So it's a fairly modest valuation, or very modest valuation for a company with some very innovative IP. So Roquefort focus on preclinical cancer medicines. They're focused on the high-growth oncology market, and in particular niche areas of cancers that are resistant to medicines, and they're using patented medicines targeting novel cancer targets or immunotherapies to enhance the body's response to anti-cancer. And we're hearing an awful lot more about this nowadays, about personalized medicine and using the body's innate system to actually trigger its own response. So the company has a great deal of expertise across the board to undertake and complete preclinical development of its assets, reaching valuation milestones for licensing and sale onto the larger the large biotechnology and companies in the sector. And of course, this will sound familiar to investors in the sector. We've of course spoke recently, Mark, about pool big pharmaceuticals, and this employs a similar model, the capital light model, where they're developing the drugs to a certain point and of course then selling those on. And interesting to know, of course, Poolbeg has progressed and is on the verge of a number of milestone or potential breakthroughs and milestones within the coming months. And Poolbeg now has a capitalization of 31 million. So there's a big disparity in the valuation there. So I think it's reasonable to expect that as Roquefort progresses, it's going to close that valuation gap. But the company is in particular a leader in anti-cancer antibodies and RNA therapeutics against what it refers to as the midkine or the midkine cancer target. And the midkine IP is registered. What is midkine? It's a heparin binding protein which is in development. It's very present in cancer, so it often is flagged up in the development of embryos, so very early on, and then it emerges again when that person develops a cancer or an inflammatory condition or an autoimmune condition. So they're realizing this of course takes place very early in the life cycle, and with this with developing the midkine program to battle this particularly resilient form of cancer, they have a number of assets. The company took a big step forward in September. It acquired Oncogene Limited, and it acquired two programs there, STAT6 siRNA or siRNA, and also the MK cell therapy. What's hugely significant about this is that of course Oncogene was founded by the Nobel Prize winner Professor Sir Martin Evans. He won the Nobel Prize in 2007, being the first to discover embryonic stem cells, and of course was knighted for his services sometime after that. So these are hugely important in terms of the IP and also the people behind the business and the experience that they have in developing these assets. And I think it's the acquisition that's really going to be the game changer for the company going forward. Now, Mark, of course, they were at the show, and I believe you have interviewed Roquefort Therapeutics. At the show were the chairman, Stephen West, and also the chief executive, Ajan Reginald. And I spoke briefly to both of them. Very impressed with the progress that the company has made. Just to bring us up to date on the developments over the past month or so, they reported interims to June 30th in September this year. Cash in the company has a cash pile of 3,328,000, and of course that's after completing the Oncogene acquisition for $5.5 million, and a $1 million fundraise was completed to assist with completing that acquisition. Of course, as I already said, it's dual listed, started trading on the US OTC markets in July. Then we've had some share purchases from non-exec directors. Darren Disley purchased £40,000 worth of shares in September this year. Stephen West, chairman, also purchased £20,000 worth of shares. So they both stuck their hands in their pockets and bought a significant chunk of stock in the company. And progress this month, the company announced that it's to report the results of its RNA preclinical study at the ESGCT, which is the European Society of Gene Cell Therapy. And what this has proved, or what the paper that they're going to present proves, is that splice switching RNA medicine can impair or hold back the action of the midkine protein. So they're making huge steps forward with the company, and I think given where the company are, just look at that comparison with Poolbeg Pharmaceuticals, a very similar model in a different area, focusing on cancers and oncology and the midkine protein, but a market capitalization currently of 9.6 million compared to Poolbeg's evaluation of 31 million. So I think there's a gap to be closed there, and if the company progresses as it looks set to do, then it could be in for a very exciting run in the coming 6 to 8 months.
Yes, excellent. I agree. I did indeed speak to the CEO there at the Momentous events, and that interview will be going out sometime this week. But yeah, I like the sound of their model, and they've got a few things coming in the pipeline, haven't they, to keep people or investors interested and hopefully moving up that value chain.
Indeed, indeed. Well, I think the scene is now set with the game changer. Really, was the acquisition of Oncogene. Of course, that brings Professor Sir Martin Evans onto the board and in as chief scientific officer, with working with Ajan and Steve, and of course the raft of non-exec directors that are supporting the company. So you really get a sense that the wheels are really starting to turn there, and we're going to see a lot of progress in the coming months. But yeah, I look forward to seeing that interview.
Excellent. Good. Okay. Well, that's Roquefort Therapeutics then. So Echo Energy, a little bit different. I think we've talked about Echo before, haven't we? I need to remind me what it is. Is it the oil?
Yes, so Eco Energy are an oil and gas company. They have a focus. They have a focus, of course, on the Latin American sector, and on their website they describe themselves as a mid-cap Latin American exploration company in the making. Focus specifically on Argentina. They have some interest in Bolivia, but in regard to the cash flow of the company, those are very much sort of blue sky projects. So I'm not going to focus on the Bolivia projects today. At the foot of Argentina, you have an area called the Santa Cruz Sur, it's an area of very productive oil fields, and also there's an oil pipeline that runs through the length and breadth of Argentina that runs right through that area. So there are a series of wells that the company has worked to develop down there, which have been producing through the year, and at this point now, the production is set to ramp up due to significant investment into infrastructure and upgrades of some of the wells there. But the company has evolved. It has legacy bondholders, and of course this in many ways, because the bondholders obviously had to be paid back. There's a coupon that has to be paid to them, and there's a due by date. This has really hampered, if you like, the development of the company in regard to delivering potential value, and also shareholders looking at the potential value into the future, the actual investment story, the investment proposition, offset by this legacy bond issue, and just to sort of take you through recent events. This is going back sort of a year, getting over 2 years actually. The company started to ramp up production at Santa Cruz, and also at the same time, at the beginning of last year, underwent a change in the VAT status. So the Argentinian VAT status change meant that the Echo's operating subsidiary down there was no longer required to pay VAT on domestic income, and there was a refund of some $1.4 million to the company last year, and that's obviously helped the company to reinvest. They reinvest the cash into developing several of the platforms down there, and then we come through this year where the company's continued to sell oil and gas, and production has continued to push forward, all the way through to August this year, where the company raised £600,000 in a placing, and shortly after reported its half-year revenues, which had grown 6% to 6.2 million. And although the company reported a 1 million loss, that was largely due to the investments it had made in infrastructure to get the wells and the field they're producing to the current levels. So production for the half year net. So this is a net barrels of oil equivalent figure of 261,290 barrels of oil equivalent, and the company has also agreed a production boost for the second half of the year. there'll be a production boost of some 40%. So that figure is going to jump dramatically. And certainly October the 11th, the company reported a further increase in production. So year to date, barrels of oil year to date 392,253, and that's the quarter three. That's the quarter three figure. So we're going to see a further increase as we go forward. But then we take a look at the share price, and of course, the share price of the company over the past year, from coming down from the highs in April this year, it's just come down and flatlined in spite of the high oil prices. So it's really, I guess we could say, flatlined at 0.26p. It's touched year lows over September of 0.24p, and of course that basically equates a market capitalization for the company of just 4.8 million, which is derisory, seeing as it's turned over $6.2 million in the half year, and that's despite running at a $1 million loss to invest into infrastructure. So what's changed, and why is there value in the company? Well, the big change took place in Thursday last week, on the 13th of October, and the company. Remember, I mentioned these bonds. So there's some 20 million euros of bond debt or principal debt, which with accrued interest. The company agreed with the bondholders to convert all of the debt, all of it, into ordinary shares in the company. So that means the bondholders are now completely aligned with the shareholders. But the most important thing is that the conversion was done at 0.45p. So, we remembering that the year highs, the company traded at a year high of 0.67. That agreement was struck at a much higher level than the current share price. And last Friday, the shares blipped on the news, so the shares popped up to 0.3p, but then came back down again for reasons which it's a complete mystery. I mean, when you've got an agreed value there with the bondholders, you're increasing production by 40%. I think this is probably one of the easiest opportunities for investors to make money, or certainly plus 10, 15 pence on their investment in the coming weeks and months. It's a mystery to me, but anyway, we're going to see Martin Hull, the chief executive, talking about this development in the coming weeks. I'll be talking to Martin too on one of the interviews that we do, so we can look at the development plan, look at also the cash flow forecast that this increase in revenue is going to mean for the company, and of course what that's going to mean for shareholders. But it's just it seems to me to me to be a no-brainer. So once those shares are in the market, then perhaps at that point that conversion and that increase in price will take place.
What is the market cap, Alan?
The market cap is currently just 4.8 million.
4.8 million, and you said it was a turnover, or revenue, I should say, of 6.2.
The revenue of $6.2 million. That's half year revenue, and production is going to ramp up by 40% in the second half of the year. We've already seen the ramp up in quarter three, and the infrastructure and upgrade boost. So in doing that, it's taken the debt out completely. The debt's been settled at a much higher level than the current share price, and we're en route to higher production. And of course, it's an oil play, so it's an oil and gas play. So you may have a view on the oil and gas price that will mean that you don't think it's going to go much higher. But I think, given where we're at now, there's a much bigger demand for oil and gas due to the Ukraine crisis. So, however and wherever it comes out of the ground, that value is going to remain supported, I think, certainly for the next year to 2 years.
Oh, good. Well, I look forward to hearing that interview then you do this coming week, because I was going to ask you about sort of projected cash flows or profits, but I'm sure you'll be diving into those figures on your interview next week. So you're just going to whetting the appetite. But I look forward to seeing how that pans out, that interview with.
Yeah, well, I mean, Martin said in his comment when they made the announcement, it was a very significant moment for Echo Energy, and of course, the chairman of the company is James Parsons. Listeners will be well aware of James Parsons. Of course, he's chairman of Coro Energy, chairman of Corsell PLC. Of course, we've spoken about Corsell before, Mark. Chairman of Ascent Resources, and non-exec chairman, of course, at Echo Energy. But James Parsons said it's a red letter day for the company. It's transformational, and also the Martin said the restructuring this combined with our strategy to grow production in Santa Cruz and the ongoing delivery against the goals demonstrates the tangible progress the company is making. So they're going to focus on delivering those operational goals, unlock Echo's full potential, and of course, when I speak to Martin, we'll have more detail on that.
Excellent. Well, great. Thank you very much, Alan, there for presenting the case of Echo Energy and, of course, Roquefort Therapeutics. And we'll catch up again next week.
Thank you, Mark. Speak next week.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.